Something extraordinary just happened in the gold market that most people completely missed. And if you understand what I'm about to show you, you'll realize we're witnessing the early stages of a complete restructuring of the global financial system. Let me paint you a picture of what's unfolding right now. Central banks around the world just purchased 166 tons of gold in a single quarter. That's a 41% increase from their normal buying patterns. But here's what makes this absolutely historic. These aren't random purchases. These are strategic, coordinated moves by some of the most powerful financial institutions on the planet, and they're all doing it at the same time. Think about that for a second. Central banks don't panic buy. They don't make emotional decisions. These are institutions that plan decades in advance. So when you see them suddenly accelerating their gold purchases to levels we haven't seen in modern history, you have to ask yourself, what do they know that we don't? The World Gold Council just released data showing that 244 tons were added to central bank reserves in just the first quarter alone. We're talking about institutions that literally create money out of thin air, choosing to exchange that money for physical gold at an unprecedented pace. Let me tell you what's really happening here. For the first time in modern history, global gold reserves have now surpassed U.S. Treasury holdings. Read that again. The world's central banks are now holding more gold than U.S. government debt. This isn't just a shift. This is a complete inversion of the financial order that's existed since 1971. And here's where it gets even more interesting. The BRICS nations, Brazil, Russia, India, China, and South Africa, are leading this charge. These countries now control approximately 50% of the global gold supply. Half. They're not just buying gold. They're systematically building an alternative to the dollar-based system that's dominated global trade for over 50 years. You want to know what a great reset actually looks like? This is it. Not some conspiracy theory, not some future event. It's happening right now, in real time, and it's being telegraphed through the gold market. Let me take you back to 1971 for a moment, because history is rhyming in a way that should make everyone pay attention. When Nixon closed the gold window and ended the Bretton Woods system, gold was trading at $35 an ounce. Within 9 years, it hit $850. That's a 2,300% increase. But here's what most people don't understand about that move. It wasn't just about the price of gold going up. It was about the entire global monetary system being restructured. Countries that saw it coming and positioned themselves in gold before that transition preserved their wealth. Those that didn't? They watched their purchasing power evaporate as inflation ravaged their economies throughout the 1970s. Now look at what's happening today. We're seeing the exact same setup, but on a much larger scale. Emerging market central banks have doubled their annual gold purchases since the previous cycle. Doubled. And they're not slowing down. They're accelerating. China's central bank has been on a buying spree that's absolutely staggering. Month after month, they're adding to their reserves. And here's the thing about China. They don't report their full holdings. The official numbers are likely just a fraction of what they actually own. Intelligence analysts estimate their true gold reserves could be 3 to 4 times higher than what they publicly disclose. Why would they hide it? Because they're building leverage. They're positioning themselves for a new monetary system where gold plays a central role, and they don't want to tip their hand until they're ready. Russia took this strategy even further. After 2014, they systematically dumped U.S. treasuries and converted those holdings into gold. They went from holding over $100 billion in U.S. debt to virtually zero, while simultaneously becoming one of the world's largest gold holders. That's not portfolio diversification. That's preparation for financial warfare. And now we're seeing India, Turkey, Poland, Hungary, and dozens of other nations following the same playbook. They're all moving in the same direction, away from dollar dependence toward hard assets. But here's what makes this moment truly historic. It's not just central banks anymore. The institutional money is starting to move. Gold ETFs are seeing inflows again after a period of consolidation. But more importantly, we're seeing a new class of institutional buyers entering the market. Sovereign wealth funds, pension funds, family offices managing billions in assets. These are the smart money players, and they're positioning for what comes next. Let me tell you about the mechanics of what's happening in the physical gold market right now, because this is where things get really interesting. The COMEX, that's the major exchange where gold futures are traded, is showing signs of serious stress. The amount of physical gold backing those paper contracts is shrinking. We're talking about a ratio that's becoming increasingly unstable. There are far more claims on gold than there is actual metal available for delivery. Now, most of the time, This doesn't matter because most futures contracts are settled in cash, not physical delivery. But what happens when a major player decides they want the actual metal? What happens when a central bank or a sovereign wealth fund says, "We don't want your paper promises, we want the gold"? That's when the system breaks, and we're starting to see the early tremors of that breakdown. The London Bullion Market Association, which handles the majority of global gold trading, is seeing unprecedented demand for physical allocation. Vaults are filling up, refineries are running at capacity, the premium for physical gold over paper gold is widening. These are all signs that the market is transitioning from a paper-based pricing system to a physical-based one. And when that transition completes, the price discovery mechanism changes entirely. Think about what gold actually represents in this context. It's not just a commodity. It's not just a safe haven asset. Gold is the ultimate form of money that no government can print, no central bank can devalue, and no politician can manipulate. It's the one asset that's maintained its purchasing power across thousands of years of human civilization. When central banks are buying gold at record levels, they're essentially voting no confidence in the current system. They're saying, "We don't trust the dollar's long-term stability. We don't trust the euro. We don't trust any fiat currency." And they're backing up that lack of trust with the largest gold accumulation in modern history. Now, let me address something important here, because if you're sitting on significant retirement savings, we're talking $100,000 or more in traditional accounts, you need to understand how this affects you. I've put together a comprehensive guide on gold IRAs and how they work. It's completely free, and you'll find it in the description below. It covers exactly how you can get physical gold into your retirement account without triggering tax penalties or early withdrawal fees. If you're concerned about protecting your retirement savings from what's coming, it's worth taking a look at. I'll leave that there for you. But let's get back to the bigger picture, because what's happening next is going to affect everyone, whether you own gold or not. The BRICS nations aren't just buying gold. They're building infrastructure for a new monetary system. They're creating alternative payment systems that bypass the dollar. They're establishing gold-backed settlement mechanisms for international trade. This isn't theoretical. This is operational. Saudi Arabia just announced they're open to settling oil trades in currencies other than the dollar. That's seismic. The petrodollar system has been the foundation of dollar dominance since the 1970s. When the world's largest oil exporter says they'll accept other currencies, that foundation starts to crack. And what currency are they most interested in? One that's backed by gold. One that's backed by real assets, not just the promise of a government. China and Russia have already started settling bilateral trade in their own currencies, bypassing the dollar entirely. The volume is still relatively small, but it's growing exponentially. And every transaction that happens outside the dollar system is a transaction that doesn't require dollar reserves. What happens when countries don't need to hold dollars anymore? They sell their treasury holdings. They convert those dollars into real assets. And the number one real asset they're converting into? Gold. This creates a feedback loop that's incredibly powerful. As more countries move away from the dollar, demand for treasuries falls. As demand falls, yields rise. As yields rise, the U.S. government's debt service costs explode. And as those costs explode, the pressure to print more money increases, which drives more countries away from the dollar, which increases demand for gold. We're in the early stages of that loop right now, and it's accelerating. Let me give you some specific numbers that illustrate just how dramatic this shift is. In the past 2 years, central banks have purchased over 2,000 tons of gold. That's more than the entire annual mine supply from the world's top 3 gold-producing countries combined. They're literally buying more gold than is being pulled out of the ground. And here's the kicker. Mine supply is declining. The easy gold has already been found. New discoveries are rare. Production costs are rising. The amount of gold being added to global supply each year is shrinking, while demand from central banks is exploding. This is basic economics. When supply is constrained and demand is surging, price has only one direction to go. But the price action we're seeing in gold right now isn't just about supply and demand fundamentals. It's about something much bigger. It's about the repricing of risk in the global financial system. For decades, U.S. Treasuries were considered the ultimate safe asset, the risk-free rate, the foundation of every portfolio. But what happens when that foundation starts to crack? What happens when the world's reserve currency is being actively replaced by a coalition of nations representing half the global population? The risk premium on dollar-based assets has to increase, and the value of non-dollar assets, especially hard assets like gold, has to rise to reflect that new reality. We're watching the greatest wealth transfer in human history unfold in slow motion. Wealth is moving from paper assets to hard assets, from the West to the East, from governments to individuals who understand what's happening. And the signal for all of this? Gold. The gold market is telling us exactly what's coming. You just have to know how to read it. Look at the technical picture for a moment. Gold has broken through every major resistance level that's held it back for years. We're not talking about temporary breakouts that fail. We're talking about sustained moves above levels that previously acted as ceilings. That's not random. That's institutional accumulation. The commercial traders, the big banks and institutions that typically suppress gold prices, have flipped their positioning. They're no longer net short. They're reducing their short positions and in some cases going long. When the players who usually bet against gold start betting with it, you need to pay attention. The Commitment of Traders report shows a dramatic shift in positioning over the past several months. The smart money is on one side of this trade and the general public is on the other. And historically, the smart money wins. But beyond the technicals, beyond the fundamentals, there's a psychological shift happening that's even more important. Trust in the current system is eroding. Not just among conspiracy theorists or gold bugs, among serious institutional investors, among central bankers, among the people who run the global financial system. When the people who operate the system start losing faith in it, that's when you know real change is coming. Think about what happened in 2008. The financial crisis wasn't caused by a lack of money. It was caused by a loss of trust. When banks stopped trusting each other, the entire system seized up. It took trillions in central bank intervention to restore that trust. But here's the problem. You can't restore trust by printing more money. You can't restore confidence by debasing the currency. All you do is delay the inevitable reckoning and make it worse when it finally arrives. And that reckoning is what we're heading toward now. The debt levels are unsustainable. The U.S. national debt is over $36 trillion and growing by trillions every year. The interest payments alone are now larger than the defense budget. There's no mathematical way to pay this back without either defaulting or inflating it away. Other developed nations are in similar or worse positions. Japan's debt-to-GDP ratio is over 250%. Europe is drowning in debt. China's local government debt is a ticking time bomb. The entire global financial system is built on a foundation of debt that can never be repaid. So what's the solution? Historically, there's only been one. Reset the system, restructure the debt, revalue the currency. And the way you do that without complete chaos is by backing your currency with something real, something that has intrinsic value, something like gold. This is what happened in 1944 with Bretton Woods. The world's currencies were pegged to the dollar, and the dollar was pegged to gold. It created stability and trust in the post-war monetary system. That system lasted until 1971, when the U.S. could no longer maintain the gold peg because they'd printed too many dollars. Now we're at the end of the fiat experiment that started in 1971. 50-plus years of pure paper money, backed by nothing but government promises. And those promises are losing credibility. The next system, whatever it looks like, will have to include gold. Not because of nostalgia or tradition, but because it's the only asset that every nation trusts. It's the only asset that can't be printed or manipulated. It's the only asset that's maintained its value across millennia. And the nations that position themselves with the most gold before this transition happens will have the most influence in shaping what comes next. That's why China is buying. That's why Russia is buying. That's why India, Turkey, Poland, and dozens of other nations are buying. They're positioning for the next monetary system. They're accumulating the leverage they'll need to have a seat at the table when the rules get rewritten. And here's what most people don't realize. When that reset happens, the price of gold won't just go up gradually. It will gap up dramatically, overnight, as currencies are revalued against it. If you're not positioned before that happens, you won't have time to get in. The window will close. We saw a preview of this in 1934, when FDR revalued gold from $20.67 to $35 an ounce overnight. That was a 69% revaluation. People who owned gold before that revaluation saw their wealth increase dramatically. People who didn't own gold saw their purchasing power decline by the same amount. Now imagine that happening on a global scale, with gold being revalued not by 69%, but by several 100% to balance against the massive debt and currency creation of the past decades. The wealth transfer would be staggering, and the signs that this is coming are everywhere. You just have to connect the dots. The International Monetary Fund has been quietly discussing the role of gold in a reformed monetary system. The Bank for International Settlements, the central bank of central banks, has reclassified gold as a Tier 1 asset, putting it on par with cash. These aren't random policy changes. These are preparations for what's coming. Major investment banks that have been bearish on gold for years are suddenly turning bullish. Goldman Sachs recently raised their gold price target significantly. JP Morgan is advising clients to increase gold allocations. When the institutions that typically suppress gold prices start recommending it, you know something fundamental has changed. The smart money is positioning. The question is, are you? Because here's the reality. Most people will wait until it's obvious. They'll wait until gold is making headlines every day. They'll wait until their neighbors are talking about it. They'll wait until the price has already doubled or tripled. And by then, the easy gains will be gone. The time to position yourself is when the trend is clear, but not yet obvious to everyone. When the data is screaming at you, but the mainstream narrative hasn't caught up yet. That's where we are right now. Central banks are buying at record levels. The BRICS nations are building an alternative monetary system. The physical gold market is showing signs of stress. The technical picture is bullish. The fundamental picture is bullish. The geopolitical picture is bullish. Every indicator is pointing in the same direction. And yet, most people are still sitting on the sidelines, waiting for permission from some talking head on television to tell them it's okay to buy gold. By the time that permission comes, the opportunity will have passed. This isn't about trying to time the perfect entry point. This isn't about waiting for a pullback that might never come. This is about recognizing a historic shift in the global monetary system and positioning yourself accordingly. The Great Reset isn't coming. It's already here. It's happening right now, in real time, and the gold market is showing you exactly what's unfolding. The central banks are voting with their reserves. The BRICS nations are voting with their policies. The institutional money is voting with their allocations. The only question is, what are you going to do about it? Because when this transition completes, when the new monetary system is in place, when gold has been revalued to reflect its true role in the global financial architecture, there will be two groups of people: those who positioned themselves before it happened, and those who wished they had. The choice is yours, but the window is closing. Every day that passes, more central banks are buying, more institutions are positioning, more of the available physical gold is being locked away in vaults where it won't be available at any price. This is your moment. This is your opportunity to be on the right side of the greatest wealth transfer in history. The gold market just predicted the next great reset. The question is, are you listening?